This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion.
Today on the podcast, I have Bill Adams. Bill is with a hedge fund for a long time. He is a private trader. He's a system developer. That means the logic and the code. He's based in Zurich. No retail clients right now, just large institutional clients. This is part one of our conversation. I hope you enjoy.
Listen, I want to jump in because I want to, usually I will jump right into subject areas, but I'd like you, we had a chance to sit down and meet in Zurich, but I'd like you to walk back and just do a little self-promotion or really just self-reflection in the sense of, as a young man growing up in America, when did you first have this trading bug, or how did you work your way in? I'm expecting the first place you made it to is the floor, and correct me if I'm wrong.
Yeah, it's actually like a little bit, it goes back even further than that, right? I grew up in New Orleans, which is basically, nothing against the city, and this is widely known, but you generally, everybody has to go to parochial school. You just generally get a better education there. And so kind of growing up in the South, as we did, if you wanted to be successful, you had to either be a doctor or a lawyer. Right. This is more or less the path that your parents tend to put you on. So as a kid, let's see, when I was at this parochial school, it's like between like the 5th and the 8th grades and between 5th and the 7th grades and between like 10 and 12. I got Little League going on. I got all these things. And there was always this one kid, and his dad could always meet him for the games. And his dad had a DeLorean as well. So if you can kind of like go back into like a 10-year-old kid's head, and this kid's dad is picking him up at 3:00 in a DeLorean, and everybody else's moms are picking them up in the cars that moms drive. You kind of like, well, what does your dad do? Right. And so we found out that his dad was like an energy trader, and he traded commodities. So I went home for dinner and I asked my dad about that. And he goes, well, you never want to trade commodities. You lose your ass in that. My dad was in the insurance business, and he was an entrepreneur himself. So I started asking more questions about it. Couldn't get any answers, for this.
You're just a young guy. I mean, you're like you said, 10 years old or so.
Yeah, 10 years old. Saw the whole thing. But the biggest impression that we had is, in the summertime, you go, everyone does like these parties. And so we went to we had a friend, and his dad was a surgeon, and these guys had a really nice place. I mean, it was really nice. And so my buddy, he said, hey, I'm having a party. And he really wasn't like a really popular kid in school, but he had the party. And so like a few of us went, and they had a spread that made like our friend whose dad was a surgeon look like the guy was like, living hand to mouth. And that made probably like the biggest impression. And, we just asked him like, hey, what do you do? He's like, I'm in imports and exports. I trade, I buy stuff and I sell it. He goes, I buy it when I think it's going up, and I sell it when I think it's going down. I'm like, well, how does that work? I couldn't wrap my head around that. So that's kind of where I guess I got the bug. I just didn't know how to get there. And then I went to Chicago for school. And so in Chicago, you got the exchanges there, and everybody sort of mystified by the exchanges and the markets and the Board of Trade. And so,
well, you're in school studying what? Not related to trading. You just had this in the back of your mind.
In the back of my head, I was an English major, and I had like a concentration in economics, and I was going to be a corporate lawyer. So I got an internship as a paralegal at a really great law firm. And I did that, just about every summer. But the summer prior to that, before I got that job, I actually got to be a runner for about, I'd say for about like 4.5 weeks. Because like one of the guys they had actually got sick and he couldn't show up. So they gave me his tag. I took a test, they gave me his tag, and I ran for him for a bit, and I really, got an education. And I didn't really do much but carry sandwiches and like basically, balance trades. And I had to watch, for certain things. But that's when I got it. And they tried to I really got the handle of it really quickly. And they said, listen, you should stay. And I'm like, hey man, I'm a freshman. I just finished my freshman year in college. There's no way I can go home, tell my parents I'm quitting college to do this. And they're like, well, look how much money you can make. I was like, yeah, but I can't leave school. So just kind of like in the back of my head to do that. And also at the time, the Board of Trade would give away information. So you can still probably get it today, but it's not downstairs. It used to be a library, so you could get like books, tapes, and everything. You just walk in there and take it. So I started doing it when I graduated. And then shortly after, I opened up a trading account, a few buddies of mine, and I pulled together some cash. And that's really how I got into the business. And I started doing it so much for myself and other people that one of my best friend, his girlfriend at the time, just passed the bar, and she's like, listen, you're going to have problems if you don't get a license and do this as a profession, right? Because you just got to be professional, right? Just be a professional. This is what you're doing anyhow anyway. So I kind of stumbled into it, and it's not really the easiest business to get into. And so when you go to the floor for a bit, that was like a little bit rough and tumble.
Well, hold on, you're a good sized guy though. So, I mean, I'm assuming that helped a little bit. Just while it's an intellectual pursuit, it didn't hurt that you were north of 6 foot, and right? I mean, that helped.
Yeah, right. Because you can see over the top of everyone. Yeah. And, I'm a little bit over 200 pounds. I was probably a little bit heavier when I was in Chicago, so you can kind of push your way around a little bit. But, since, I'd already had some work experience, and I was coming out of like financial consulting and everything else, and I was doing a lot of investment banking, management consulting type of projects and work, I was probably a little more tuned in to like the economic side of the business. So I found a shop that let me come upstairs, and I just came into the business retail. Probably studied and took the test within a couple of weeks. So by the first month, I was like fully on the phones and working the retail side of the business, which was a lot of fun. That's why I got probably my best education, just about how the markets work, how the business works, from the inside out. And from spending that little bit of time on the floor that I spent, I had a really good idea of like how the trades actually got filled.
Okay, Pat, so what year are we talking? Where were we at? Just so people can follow along.
Well, let's see. I graduated like 93 or so. And then I was doing a lot of trading for myself, probably, let's say, for 8 to 10 years. There's a little more narrative I could give about that, but I'm summarizing for you. So now we're like in the early 2000 or so, and I just basically said, you know what, I scrap everything. I'm going to just go and be a trader. That's it. Because nothing else really kept my attention. So
hold on, when you say I'm going to go be a trader, are you completely, this is your own account you're working with? I mean, right now you're with a fund in Zurich, but back then, was this just you?
Back then it was just me and an idea that I could just do this full time.
Well, okay, but once you said you could do it full time, what was the trading idea? What did you figure out? Where were you motivated to go? I mean, you had a strategy. So where were you going at that time?
Well, basically what I had done is, we kind of like, I did a bunch of research about Mr. Dennis and all these guys, and
Richard Dennis.
Richard Dennis, that's right.
So that story motivated you like it motivated many.
Yeah, it motivated me, and just the whole idea that anybody could be a trader. And the whole part of it is that they try to mystify the market so much. And generally, you come into the retail side. So I was basically going up and down, commissions that were anywhere from $65 around turn to $100 around turn. This is like, early 90s or so, right? So
when you say retail, you just mean what you're being charged, because you weren't a broker or anything. Right. Okay.
What I was being charged.
Gotcha.
So you develop a trading strategy that allows you to be very productive. So basically, I figured out really quickly for me that futures wasn't probably like my best option to go. So leading into that, I learned how to become an options trader, because it gave me more time. to sort of weather out some of the volatility. And then when I flipped into options, that's when I figured out, I was like, hey, I don't have to be right all the time, because you start to make spreadsheets and you start to track what you're doing, and you say, okay, the market went in the direction that I thought. It just took like 2 or 3 times to get there. Like, how to stay in the market long enough to get that move. Well, for me, that solutions was options. And then I studied options.
Okay, but you're talking about the instruments, but ultimately you had to still have a strategy with those options.
Yeah.
So where were you going strategy-wise?
Strategy-wise, it was really trend following. Being at the Board of Trade, like I said, I got a ton of information, and it's a really easy place. I mean, there's a bar downstairs called Series, and if you were like interested in markets, you could pretty much find anybody to talk to you about markets, and real traders, from the floor, from upstairs. And I got to understand the seasonality of some of the markets. It's not something you can talk about, like if you're a licensed broker, because they like to think that it doesn't exist, but there's a seasonality, there's a planting season, and there's a harvest season, right? And the market and the prices behave in a certain way, right, between that period. So you get to be able to start to mark levels. And generally, before they plant, the prices aren't so high, right? In the middle of the summer, the prices are generally higher. And then towards, harvest season, if it's like a bumper crop, the prices come off. And if the season wasn't so good, then the prices tend to continue to go up. So once you start trading markets, and my first trade ever was in corn, and it was a good time to start, which is in July. So, I caught a rally in that, which was sort of like the worst thing that could happen, along with one of the best things that could happen as well. Because we made a bit of money with like the first couple trades, and so we thought it was a lot easier than it was. So we were probably more discretionary than we should have been, and that was probably wise to be. But you lose a few times, and then you figure out that it's not so easy, as looking at a chart. And at that point in time, there was this newspaper or this data service called Commodity Price Charts, right? And they delivered the newspaper to you like 6 o'clock in the morning. So you could like look at your charts, every day, and then, get prepared to make the trades. So that was a little bit my process that I went into. And so basically what I learned how to do fairly quickly was to sort of mark what I would call like medium term to long term trends. So when you start off as a beginner, you have like this mindset of like buy and hold, because that's what you get taught in school.
Were you completely self-taught at this moment? Were you just other reading materials? You mentioned you down at the restaurant bar on the first floor that you were talking to people, but strategy wise, were you kind of figuring this out on your own?
Yeah, basically I was just digesting as much information as I could.
Okay.
And because in school you would get all the theory, but when you would ask questions about like, how do I actually do it? That's where the professor sort of fell off.
Yeah.
And so I couldn't get those questions answered. And so if you're curious and, if you figure out these guys are just regular guys and having a beer, you start talking markets with them. And also too, I was just trying to find a way to get into it, into the business also at that point. So I was just sort of going after what I wanted to do more or less. Let
me get you to jump a little bit here. So you develop some trading acumen, you develop your own trading account, you're getting this experience. Now, I don't want to jump forward to where you are exactly right now today, yeah. But there were some intermediate steps where you got involved with, noteworthy operations and other funds and stuff. How did some of that transition happen?
Well, really the transition more or less happens a little bit based on initiative, some of it, and a lot of it's just, I have a general curiosity. And so I like to, and I have the kind of personality where I like to take things apart and put them back together. I did this. My dad brought me like remote control cars and airplanes. I took each and every one of them apart and tried to put them all back together. Sometimes I was successful, sometimes not. So with the business, I did the same thing. And once I was on the retail side, I said, I'm missing like a big piece of this puzzle. Like, what's next? So from when I went to a retail desk to a more of an institutional trader. And this guy basically was running really big accounts like General Motors, Shell, stuff like this. So same game, just how you do everything changes. The quality of information changes, how you structure the accounts, all these things change. And so whereas you have a client, the guy's running like $100,000 or so, he really only needs maybe one account. You start diversifying him amongst like 3 or 4 accounts, it makes it really difficult to manage that. But if you're running a book, for an institutional trader, it's say like, 30, 40 million, you want to spread this guy across like a few different clearers, for a number of reasons. And I won't go into too much detail unless you ask, but the idea is how to execute the trades amongst all these accounts at the same time, how to structure all this business that way. So these are some of the things that you start to learn, whereas my approach was more varied. So I didn't sort of go into like a big bank and then sort of matriculate, through all these different departments. So I kind of basically made a career move after career move after career move. And after I really digested as much of the business as I could, and I learned as much as I could about the business, had some success, had some failure, and generally just, sort of move along. I always knew, what I wanted, and I probably end up back like in that area at some point in time. But the main idea is I essentially found ways to understand how the business works and how to apply a process to that almost. And so that's more or less the direction that I moved in, because once I could understand like how all the parts work together, how the custodian works with the clearer, so on and so forth, how the exchange works. And at this time we had like COMEX, and we had all these access and all these other markets that sort of happened in the overnight, where you could do like a little bit of arbing, but you could also make a trade at 2:00 in the morning, and then that trade would come back and clear a couple of days later, on COMEX, and you would be all done. So it's things like this that I had to learn on the institutional side that really doesn't exist in the world today, because everything's electronic and it's more or less side by side. But once you discover the inner workings of that, then you can basically progress up to the next rung of the ladder. So when you go from retail to institutional, and then institutional into like sort of a hedge fund, type of business, you really need to know where all the moving parts are before you can really apply it, because it's really a business. So like any other business that you start, you have exposure, and your main exposure really isn't your strategy. Your exposure is primarily like your operational risk, controlling your costs, understanding like how much it's going to cost you to clear, who to clear with, who has the capability, who doesn't, so on and so forth. And so throughout my whole career, I probably work with no less than probably about 30 different providers from the clearing and the banking side. And so amongst that group, it sounds like a big number, but it's really not. You find out which has a greater proficiency in what area than the other. And so now I'm trading markets, U.S. markets, European markets, Asian markets, African markets. And so not every bank, no matter how big it is or what tier it's on, can cover each of those markets well. And so that's basically how that sort of beginning at the exchange, understanding how the pits worked from the grains pits, corn, soybeans, so on, and wheat, so on and so forth. Not all the traders were good in those areas either. So you sort of like transfer that onto like a sort of a macro picture, and you realize not all banks have a really great proficiency. Not all the clearers work really well together as well. And you sort of put that together in one pot, and you put it together into something that's really definable and sort of easy to do. Right. And so I'm jumping around.
No. Listen, let me, you're not jumping at all. You're fine. I think most people don't have a chance to go through these experiences. So I think people can listen in and they can go, oh, this is interesting. I didn't know how this worked or this perspective. So, but right now today, so when I meet with you and Aaron in Zurich a couple weeks ago, right now, with all these different experiences in your past leading to where you are today with the fund, what is your daily life today? What do you consider as your expertise in the hedge fund space with your fund today? What do you bring to the table, so to speak?
Well, what I bring to the table primarily is the ability to generate alpha in a consistent and controlled manner, right? And that's not something that I could always do. And alpha, for those who probably aren't from the trade, more or less, is just basically generating a positive return. That's what alpha is. And it takes quite a bit of practice and dedication and everything else to sort of get there. But
with beta being just what the market would give you on average. So this is the above average aspect.
The above average aspect, right? Because we're in this business to like generate returns. I don't care about the news. I don't care about anything else. I just care about, plus, making a plus, right? Being positive year in, year in. That's my goal. Absolute return approach. And so that's the general. And behind that general offering, it sounds really simple. It's like an iceberg. There's so much below the surface that you have to pay attention to that helps you generate that positive number. You have to be aware of that. So it's not just about being really smart about a strategy. It's also about understanding how all the underpinnings to that strategy correlate to one another. So for instance, if I'm in a situation where I'm working with a provider that's inefficient, that's going to cost me money. If I'm paying too high fees, to various providers or exchanges, that's going to cost me money, right? That's going to cost me returns. If I don't manage my treasury properly, right, that's going to cost me returns. And so because basically in the environment that I'm in, we're paid to perform. Purely, right? That's why we get paid. I mean, you get a small management fee in the hedge fund business to basically cover your costs, which are increasing by the day. But by and large, we're in this business to generate returns, and the reason why we attract investment is because someone's seeking a positive return, and so I think it's a pretty fair exchange.
Okay, Bill. So today, right now, with your fund based out of Switzerland. So where are you strategy wise? Where's your firm coming at this? I know we talked about a little bit about this at lunch, but when you approach the markets and what you're looking to offer to clients, the different style of generating alpha, what have you devised? What has you and your firm devised that's different? What are you bringing to the table there?
Well, I think the best way to explain it is we're offering what can be called like a global macro. And that means it's just an alternative investment strategy, and we combine various asset classes. Now, within that, we employ what's called a core satellite approach. And I'll go into a little more detail about what that means. But the underlying, what drives this whole thing is a system. So what I've tried to find a way to do is to create a system, and it is systematic because I'm running algorithms and everything else that basically recreate the criteria, or that look for the criteria that I would normally choose in order to make a trade. And so, and by running this system, it allows me to evaluate and monitor a great number of markets every day at the same time. And basically it lets me know when I need to turn my attention to those markets. And that allows me to be very efficient and much more effective than I have been in the past. But also it allows me to give myself a constructive guideline to follow, and also gives me like a bit of a few breadcrumbs to drop along the way so that I can sort of find my way back if I go deviate too far from the path. So
well, I'm gonna let you break that egg apart a little bit more. So, let's, without naming or making comparisons to known quantities, but there's a lot of large quote global macro players out there, big trend following type players. Strategy wise, where are you coming at this from?
Well, strategy wise, I mean, we would be trend followers, I would say, as far as the strategy is concerned. Except I don't really care if the market goes up, down, or sideways. And we have a heavy orientation towards options. And so by doing that, at least within this particular strategy, it gives me a great deal of flexibility. And it also allows me to better define the risk, going forward. So when I talked about the core satellite approach, basically what that means is I've designed a trading system, and I've identified 10 markets that perform really well for those parameters. And those markets make up the core. And as it sort of works out, that these are the most efficient markets. So one of these markets is the S&P. I have crude, heating oil, RBOB, natural gas. There's some grains in there, metals, so on and so forth. Now that's the core. And this is where I get the vast majority of the trades. And also, I can have a really broad market within these exchange traded markets. And within the satellite group, these are the markets where, because we're not talking about risk, but I have defined risk parameters for the core group and defined risk parameters for the satellite group. Since the core group is more efficient, the parameters of risk, and it doesn't sound like a lot to most, but are between like 1% and say like 3% for the core group. Within the satellite group, the risk is maybe about 0.5% to about 1%.
What would be some examples of the satellite group, the markets in the satellite group?
Satellite group would be like trading the Hang Seng, which for me is terrible, is really volatile. It can be. Would be like orange juice would be in the satellite basket because it is really inefficient. Cocoa would be in the satellite basket. Soybean meal is another one. The all share is a market out of South Africa that's in that basket as well.
So big picture though, satellite means less risk for you.
Yeah, satellite means less risk. The cool thing about these satellite markets is when they do break out and a trend happens in these, they generally like really run. The problem is that you have to take a lot of trades in order to really find that one moment, right? So the idea is within the satellite basket, you're allocating so much less risk to those trades that you're not going to have so much exposure as you would if they were in the core basket, but you're still giving yourself the opportunity to catch on to it. And so the way that the system is designed, I can probably lose 4 or 5 times and then make one trade and then pay for the whole thing. So, and generally my hit ratio right now is just around 51%. So it's pretty decent as far as giving myself opportunity to gain exposure to those markets. It's
decent though, but it's not like the hit ratio is not at the top of your mind. It's your expectation. How much you're making ultimately wins out.
Correct. That's the point. And so I could only hit 35% of the time because it doesn't matter how many times I want to lose per trade. It just matters how much I make for that particular trade. Right. So that's really where it comes in. And so far, we've been pretty effective at identifying like some of these really big moves, but just simple rule of thumb is I'm not making any trades without knowing at least 3 things. First thing is I need to know where I want to enter. Second thing I need to know is where I want to stop myself out. And then the third thing I want to know is what my objective is. And I really follow that. I follow that. Actually, now it's almost like a religion. And actually having a system in place allows me to sort of manage that process better because I have that argument with myself. And I say it that way because I designed the system. So if I basically deviate from the system, that means I'm deviating from the criteria that I've set myself electronically. So, and the correlation, is from me not doing it is a negative one. So I don't really deviate from the system very often unless it's like in an extreme situation, and that's only risk off. So when we come back, to that general execution proposition, it becomes pretty simple, a pretty simple approach. And by me creating a process by which I can always find trades and identify opportunities, it allows me to create scale, right? Because my goal isn't to work, with a few $1,000,000. I want to work with a few billion if possible. And so what I can really do is the challenge now becomes how do I create a strategy that allows me to work with more and more and more capital, right? So that's what my goal is at this point in time.
So let me get you to make some comparisons. Classically, many of the trend following traders starting back decades ago, obviously many came through Chicago roots with a futures trading background, but not as many, especially even when they got to be public managers, public traders trading for clients, were not big options guys. So make the comparison that you had the experience, you got the experience, and you're going the options direction. Why do you see it as more of a benefit for you than just going, straight old vanilla futures?
Well, for me, I don't want to discount futures at all because there are a lot of situations in which futures are really necessary. So I kind of look at the market in terms of like a toolbox. Some jobs I need a hammer, sometimes I need a screwdriver, some jobs I need pliers, so on and so forth. So for me, and the way I trade, options are the best because it allows me to mark levels. So even though you can trade well in advance, so I like to trade deep into the curve. Let's say like 6 months into the curve. That means like 6 months I have the delivery. If I do that with futures, I'm in really illiquid situation. So if the market goes against me, I can't get out. And if with options, I can go 6 months or a year into the curve. So, for instance, there's some
and still have the liquidity.
And still have liquidity. That's the whole point.
Yeah.
And because I want to mark the level, right? And I trade a lot of strips, especially like in the energy. So I might trade like a 6 month strip. So if I see a price and I said, well, hey, if let's say for instance, gasoline price tends to go up, let's say in the summer, and this is not a hard and fast tendency based on what we're seeing in the current market, but just by way of example, if I see gas at $2 and then the system's telling me it's a buy, I would like to buy that gas at $2 for as long as possible. So what I would do, instead of just buying it in the spot month, I would buy it, let's say like we're in January, I'd buy January, February, March. I'd buy it the whole year, if I had enough capital to do that, because I think $2 is a price, when I look at that bell curve, is one that we're not going to see very often. And based on what I expect hughes to be, I expect that the price of gasoline would be much higher than that $2.
Okay, but what you just described in the last 30, 45 seconds, though, the seasonality idea, this is not something where it's kind of like Bill by the seat of his pants. This is Bill coded, researched in the system, and you're taking these trades and you're saying to yourself, well, you kind of know the seasonality, but if the system dictates the other direction, or the system dictates an exit, you're trusting your system.
Correct. And the other thing, I mean, we talked about seasonality just in loose terms, but I'll say it this specifically. The strategy I'm running right now is back tested at minimum 11 years. And then from that 11 years, I have 2,000 iterations that I look at as well. So this isn't, I'm not basically throwing a dart at a board and hoping that it happens. So I have a fair amount of data to feel comfortable with what I'm doing, but coincidentally, there are perceptions about seasonality which aren't precise, but there is like a relatively decent correlation if you look at the data long enough, if you're looking at certain markets long enough. So in 1 month, gasoline prices may go up in May, right? In 1 year they may go up in May. In another year they may go up in August, right? The idea is that we are positioning ourselves for a rally that we expect to happen based on usage and a number of other variables, and it tends to happen in the summer.
But
so
if it doesn't happen, it's not like you're sitting there trying to make it happen.
Correct. We don't trade it. There's no reason to trade it, and that's the whole point of running a system. The system lets us know when that market meets the criteria for a trade. So I don't have to project my own experience or ideas or anything onto the system. It's doing it, right? So when it tells me a trade's coming up, I look at the market and I have the last say, of course. But as I said before, I've already indexed myself, and I see that I need to follow my system. But having said that, I'm looking at probably close to 50 markets. So I have plenty of trades. I'm not married to any one particular market. I just care about like a good signal. That's all I care about. So it could be, plastic bottles for all I care. If there's a market on it, I'll trade it.
And that, it's funny, that's such a simple sounding example though, but for many, let's say even new retail traders, and frankly, many institutional traders, they hear somebody like you say, well, if there's a market for plastic bottles, I'll trade it. I don't care. And I think a lot of them would initially might think, well, that sounds cavalier, or how are you able to trade that? That doesn't make any sense. I still think there's a majority that does not, when they hear about the systematic strategies, they still think it's this black box, hocus pocus, and they don't appreciate that there's the human condition, the human thought behind all these rules, and all the computer is doing is allowing what goes on in the mind to be coded and put down and stuck to with discipline.
Right. It's. I'll say it like this: I'm a new systematic trader. I would only call myself a systematic trader since maybe the past 3 years. And I did everything with some loose databases, a trading program, and Excel. And I will tell you, it took me the entire day, maybe like 10 or 12 hours a day, just to update all the data, crunch it, look at it, and then a trade result pops out. Now what I learned how to do was work with some different types of software, put in all my criteria. You get a couple developers, that help you like refine the idea. And now I can run my reports in the morning. I'm still crunching data, but I'm crunching it in a different way. And I'm measuring it. I'm finding ways to approach the market in the best way for myself or for the fund, as opposed to actually investing all that time and just crunching the data so I can come up with an idea. So it's just a different way to sort of use your time. I still probably work just as much as I did before, but now I've expanded my view on the market from, let's say, maybe like 10 to 12 markets now to at 50. Right, that I can actually trade. And so finding those trades is the important thing. The important thing is focusing, having an expertise in certain areas, but sometimes for certain markets, for my trading style, there's no trade. And so now I'm sitting on my hands. Whereas now with a system, I have like a broader view, and so I have more opportunities. So for me, I can tell you that I've basically improved my trading opportunities by about 200%. So I see that many more tradable trades that meet my criteria.
Well, let me ask you this. So as a relatively young fund that you and Aaron are involved with right now, and but obviously both of you and the other folks you work with, a tremendous amount of experience in the markets over a long period of time. Where do you see yourself in terms of inspiration? For example, as you got more involved in the trading process, are there any either books or other individuals outside of your firm today that were really inspiring to you? You mentioned Richard Dennis early on, but as you got farther into this process, is there any type of resource or information you might want to mention?
That's a great question. And I
try to occasionally get at least one good question.
Yeah,
usually they're not very good questions, but I try to get one good question in, right?
Yeah, I guess my inspiration doesn't really come from anybody in the marketplace, because I have to say like this: sitting on a desk, you're competing against everyone on the desk. So if there's like 10 or 15 or 25 or even more people on the desk, we're all in competition, right? So that's a little bit of what's driving you. And so once you sort of move into a space where you have like these audited returns that are out there for the world to see, you operate against that. But there's a few layers in there. So it's kind of like golf. You're always competing against yourself in that way, but also you're looking at your pocket, right? The better you perform, the better you do. And so what we're striving to do is sort of find ways to really perform. So what I try to do is I try to benchmark some of the best in the business, the guys that have like the highest returns. And I look at their performance, I look at their volatility, and I try to figure out which markets they're trading, and I try to understand what they're doing. And I think that's what's driving me, is the fact that I really still don't understand as much as I should about the market. And I guess it's just I have that curiosity about it. I mean, my wife will tell you I'm looking at spreadsheets and markets and all kind of nonsense all day long. It's just sort of like my fixation at the moment. So that's really where I get it from, just being able to sort of crack the nut, So the year that I have like 100% of my trades all work, I think that's probably when I will have reached my goal. But
come on now, 100% of your trades are never going to all work. Now with the trend following strategy, you're always going to have a bunch of losers in there, right? Come on.
That's right. So I mean, so what I'm saying is it's sort of like looking for that perfect sunset. You may never achieve it, but that's sort of the goal, that I think we're all working towards to win at this point is very important, but, you also like, how do we keep score? At this stage, we keep score by generating really positive returns over an extended period of time, and then working with a lot of capital. right? So what's driving me now, and what I want to do is to really, find ways to, now that I understand how the infrastructure works, now that I have a process to apply, is to basically work and with as much capital as possible and apply it that way. It's a little bit self-serving and a little bit myopic in that way, but I think for us, I think that's the sort of focus that we need to have, I think, for anything that you do, right? You look at the Jamie Dimons, he's working with, a huge book, or at least he was. These are the sort of guys that it sort of inspire me and drive me, regardless of what the public opinion of them may be. It takes quite a bit of experience, skill, fortitude, so on and so forth, to be able to run a book like that successfully and manage the people that also, work towards that same goal. And so these are some of the things that I'm working towards. And so for the hedge fund sides, to be able to run a shop, not have any, miscues or big issues operationally, and to be able to put forth a scalable product, that's really the goal.
Okay, so let me shift gears on you a little bit, and I'll see how much I can get you to say, and see if you'll be as candid as you might have been sitting over lunch in a Zurich pub. So, an American growing up in Louisiana, you're now based in Zurich.
Yeah.
This is not Kansas anymore, Dorothy. This is a different ball game. So, for those folks, there's a lot of people that grow up in the South. My mom's from the South. So for those folks in America that have not traveled outside of the U.S., and here you are coming from Louisiana via Chicago, and you're in Zurich, living, working, try and give some insight as to what that city, what that country has figured out that maybe America could learn from. What can we learn from the Swiss? Because they've been pretty damn successful.
Well, I would say, like, in some ways, right, just to sort of comment on that, most of my friends and family think I'm from outer space, to be honest, because most of them really didn't move so far away from home. So even me going to college or going to university in Chicago was like a really big step, right? And then from that, I was supposed to come home. But sort of jumping over to the Swiss side, they have a really, it's really difficult to make the transition, but you can make it over a period of time.
The transition means you moving there, you integrating into a different society, that transition.
Yeah, that transition. Yeah, it's a country of laws and rules, right? And so what happens is, we really don't get it, like the way they work when you first come here. So the best example is, I don't know one expat here that doesn't have like a really huge speeding ticket. Because if you go 10 kilometers over speed limit, which is like roughly like, let's call it like 7 miles over the speed limit, you could get a pretty decent fine, right? So, and we're not talking about
how big.
Biggest was about $200, $220, yeah.
And 7 miles an hour over in the States, we don't even blink about that. We think we're safe until about at least 10.
Right. And you don't argue the ticket. They take a picture of you, they send it to you, you pay the bill. There's no recourse, right? Because the law says you don't speed over that. And they give you a little bit of grace area, right? So you can go like maybe 3-5 miles over, kilometers over. But once you hit 10, then they calculate the whole thing against you. So it's not super strict. So there is a little bit of error, worked into that. So, and so this is a society where everything is stated. Right. And so, but it's also a place where, they have a fair amount of curiosity and they're going to give you some good opportunity. But they also have a really big commitment to doing things like their way. So when someone comes to the States, we're expecting them to like sort of like assimilate in, it's like, baseball, apple pie, Coca-Cola, so on and so forth. So over here, it's more or less like that same thing, but then nationalism comes out in a different way, but highly decentralized, and everything is more or less based, on the honor system. It's just if you get caught violating any of these things, the penalty is going to be like pretty strong, right? And then it escalates if you continue to make that violation. So it's not so punitive. as the U.S., but it can be severe and can be really, really, really uncomfortable if you don't toe the line.
Okay, now, but you mentioned apple pie, Coke, and I don't know if you said baseball. So make that comparison to living in Zurich. So give me some color here. Paint the picture.
So, yeah, man. So in Zurich, we have like cheese, chocolate, and we went out for like.
So a lot of health food is what you're saying.
Yeah. A lot of health food. Here. Yeah.
But the food is very healthy,
potatoes.
actually. We talked about that. The food is, I mean, I think Aaron was saying that even though it's not stated to be organic, a lot of the food in Switzerland would be organic just naturally.
No, everything they tell you is bad for you in the States. People eat copious amounts of it here. So for instance, there's kids walking down the street eating loaves of bread, right? Everyone here eats tons and tons of cheese. It's just really sort of the qualitative aspects of all the food and everything in general is just really good for you. So, and then the lifestyle here is pretty active as well. So it's you spend a lot of time in the outdoors and you basically achieve a really good balance, but it's not unusual to see, skiing was like a big part of it. I was just out skiing a little bit ago, but there's a really good work-life balance, I would say, and there's a commitment to it as well. And so what they try to do is just make sure that everybody here has it all. Now, once you get into it, and it's not all sunshine and roses, I don't want to paint that picture, but it's a pretty balanced, situation. It's got its challenges.
Can I ask this though, from a big picture standpoint, living in Zurich, the idea of working hard, making success, being an entrepreneur, being a capitalist, finding alpha, making it happen, kicking some ass, is that respected more in Switzerland than it is the U.S.? And I'm not trying to pick on the U.S., but is it at a higher level there than we are currently today?
All right. Well, let's say it like this. Let's say it like there's some yes, but with some distinction. So this is probably the closest thing to a free market that I've really been in. Right. So really, they create the access for you, provided that you can conform to what's needed to do that. So in some situations you need to be licensed, in other situations you don't. But it's a real free market. So whatever you want, you can have it. So if you want a gas guzzler, you can buy it, you just got to pay the tax on it every year. Right? So if you want like an electric car, that's fine. Nobody really judges you. It's just a cost associated with like how you want to live, right? Because what we're doing all is contributing into like general society, but you can earn as much as you like, right? Or you can earn as little as you like, and the population is small enough that the government can provide some assistance. And I will tell you that talking about that part of the deal, there was like a populist petition put out that got voted down by actually the Swiss themselves, and they sort of got put off to government where they wanted to limit CEO pay to 12 times the amount of the lowest paid employee at the company.
That doesn't sound free market.
Doesn't sound free market, and I would say that the general consensus of society here in Switzerland, they voted it down, and they voted it down pretty strongly, right? So they have a good sense of what is viable, not just for their life and society, but also for business. So for me, I kind of see like a really great balance between business and life here, right? And so you're not going to be persecuted, for doing well, but also, when you come here, I mean, everybody pays their fair share, right? And so that's really clearly stipulated as well. So you really coming into this deal, you know what your exposure is going to be. There's not going to be any surprises. They're not going to like change the laws around you or anything else. So everybody participates, and everybody benefits, which is a little bit different than in the States, where let's say like just over 40% of the people pay taxes in. So just what would that look like if everybody had to pay a little bit, right? So if you didn't, even if you only had to pay $5, right, tax, everybody can afford at least $5. And I'm using that nominal figure, but as long as you're contributing into the society, it's like a different sort of perception. Now you're sort of bought in, meaning that even though you may not like have the same capability as someone else, that small contribution, right, means that you've contributed into society, even if now the government also provides you with some assistance. And so that's a little bit of the way that it works here, at least as far as my understanding of it is. And that's, I think,
that's quite different, because in America, a vast part of the population has been deemed basically incompetent by the government, and you don't have to contribute anything.
Correct. And so in a way, in my opinion, not to get too political, is that means the government kind of gives up on these people, and it's better to like give them a little bit to get by on than to actually invest in them and to sort of build them up. That's kind of how I look at it. But I don't want to digress too far.
I don't think we're being political. I think this is just, looking at, it's look, everyone knows, even if they've never been there, everyone knows that the Swiss have done extremely well when it comes to the concept of money. And so I think any lessons that you're passing on, any insights that you're passing on for people that have never been, people that have not experienced, not lived there, I think it's interesting, because clearly Switzerland has done extremely well.
But they don't sell their property here. That's another thing. So, they really have a more conservative approach, but they understand where value comes from as well. So most value, I think, is generated from real estate and what can be built or grown on that. So they understand that as well, and they're very protective of their assets in that way. So these conservative approaches, there are pros and cons to that as well, right? Because for someone in our sort of business, there tends to be a really high focus on wealth preservation, right? Which doesn't really, so now you're leaning more towards that beta side, right? So it really doesn't focus as much as it could on alpha, so their aversion to risk in some ways, can create some challenges too, right? So that's, if there is, just to be balanced in the discussion, that's probably where the challenge, can be. So for us, you put us in a box and say, okay, you can only generate returns in this manner. That's where the sort of challenge comes from. How do you generate higher returns? By taking less risk, right? Because that's a little bit of the rules, as they apply here. If you want to market and distribute, within this country, there's a high focus on that. Nothing wrong with high returns. You just got to really keep your eye on volatility. Whereas in other markets, like maybe in the US or like in Asia, there is less concern about the volatility. So in the States, you could probably take a swing. It could be like 8%, 10%. Someone's going to call and say, hey, what's going on with the account? Like, what's going on in the markets? Like, let's talk about it. Let's explain. A swing like that here, on a monthly basis, you're going to have quite a few more phone calls, right? And quite a lot of concerns. And maybe you have some redemptions as well, right? Because they don't want to take that exposure, to the market. So you have to just sort of understand like where you are and like who you're working with and that sort of sense. So that's the other side of the deal, at least from the business side. But yeah, by and large, really cool place, very traditional. And I'm settling in here, and I'd have to say, from my perspective, it's quite a lot like the South. So I think in general, when you have expats here, and they're Southerners, we tend to get along a little bit better than people on the other side of the Mason-Dixon line, just because of just
and ease.
Yeah. Yeah, that's just how it goes.
It's funny. I always, just to kind of go off on a slight tangent, I always love, even though my mother's from Southern Virginia, I always love the fact that when I'm in the deeper South, it's something where I can relate to anybody and everybody in the South instantly, and not trying to ingratiate myself in a fake way. It's just natural. It's just because I've grown up around it. But what's so interesting is to watch somebody from the North and you put them in the South, and it's just like they just have no clue. It's the most interesting thing. Where I could be in the North and you could be in Chicago. That's just as easy for me and you. But when they try to do the South, they can't do it.
Can't do it.
Yeah.
And it's It's really, and it's really simple stuff. Like I know the baker. It's I know the butcher, and it's gonna sound funny and cliche. And I know the candlestick maker, but this is really the way it works. It takes time.
Yeah.
It takes some investment on your part, but that's kind of like the South is a little bit more about slow cooking, and that's really sort of mentality here as well. They want to take it in, but like I said, everything is stated here. So it's demonstrated. So you can't just show up and say, "Hey, I can do X." It's okay, great, you can do it. Here's your shot. Show us. And so that's sort of where the rubber meets the road. And so if you can perform, then it's a great situation.
Okay, Bill, I can't keep you all day. We're going to have to talk again and get into even more strategy and maybe break it down. And because I knew you had so many interesting things that I wanted to go today. But where can people reach out and find out more about you and your firm today?
Well, you can go to pecoracapital.com and you can find out all about us there.
PECORA capital.com? Correct.
And we have a ton of information there. What we're putting out may not be appropriate for every retail person, I will say, just up front. But that's probably the best place to find us and start to sort of learn about like what we do and how we do it.
That means for you out there, listeners, the 1% of my listeners that are complete crackpots, please don't beat Bill up. But for those of you that are normal and might have some money to invest or like what they're doing, sure, reach out. But crackpots, please.
Yeah. We'll keep like a really low wake. We tend to, and we're quiet and sleepy over here, but we like to think that we do pretty good work. Yeah.
Well, listen, I think I appreciate you being on, and I enjoyed meeting you, and I enjoyed the tour around Zurich, and hopefully I'll be back this year.
Excellent. Anytime.
Okay. Thanks, Bill.
All the best.
Take care. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.